Say you buy a property at 1 million dirhams, you put down 300,000 dirhams, and the return you're getting on that's 5%. You're getting 5% on the 300,000 you've put down, and mortgage rates are as low as 3.7 at the moment. So if you're getting 5% return, you're making money on borrowed money.
Cash-rich buyers are opting for mortgages because it makes logical sense. Can you talk me through that?
If mortgage rates are at 3.7, you can borrow that from a bank, put your funds into another asset class that's going to generate more income. Again, you're making money off of borrowed money.
You spoke about the fixed versus variable. Can we dig a bit deeper into that?
If I'm your broker, I want to know about your future. I want to know, do you plan on having a family? When you have a family, you're going to have school fees. And in that instance, you don't want to see your mortgage payment go up or down. You really want it to be consistent. One of the banks recently announced a product that can go up to 80% loan to value non-resident buyers. That's something historically we've not seen for a long time.
Taking a mortgage means you are overextending yourself financially, truth or false? What if the path to passive income didn't start with cash, but with credit? Michael Hunter is the co-founder and CEO of Holo, a digital mortgage platform that has helped thousands of UAE homebuyers simplify getting finance with transparency and tech. After years in mortgage brokering in the UK and the UAE, Michael shifted his focus to building a platform that treats mortgage as more than a product, one that supports choice, clarity, and opportunity. Today, he joins us to explore how smarter financing strategies can unlock property wealth and income potential in Dubai, and we also debunk some mortgage myths along the way. Michael, welcome to Sobha The Living Room. How are you?
I'm very well, thanks. Thank you for having me.
No, of course. Excited to have you here because truly the reason and the approach that we want here is to bust a lot of myths. And I think that you are the perfect person to do that for us. Your experience, you've been here in the UAE for over a decade. Your team is growing phenomenally into Saudi, into Morocco, different markets. So, I mean, no pressure, but I do think you are the best person to advise everybody listening right now how important smarter borrowing is and how to just create greater wealth for future planning as well. So I think the first thing I want to ask is when we're talking about Holo and what it is exactly that you do, talk to me about your experience and how you are where you are today.
Sure. So I've been, as you mentioned, in the local markets for over a decade. I started off as a mortgage broker. So I was in the trenches with our customers trying to find the most suitable mortgage options. Now, throughout that time, you learn the problems that you face, the lack of transparency in the market. So around about 7 years ago, myself and my co-founder got together and decided, how can we do this differently? And that's when we set up Holo. And Holo is a digital mortgage platform. And it's about putting the mortgage options that are eligible for our customers at their fingertips at any time. Anywhere on any platform. When you're a customer looking to buy a property, you want to know there and then how much it's going to cost you. So what we do is we take your profile, we'll match that against all the banking products in the market. We'll filter that down to which ones are the cheapest, and we'll match that to the purchase price and your affordability. So within 3 minutes, you know whether you can afford the property that you're looking at. And that was the main objective, to make sure when you're in the market that you can make an informed decision when buying a property and you're not entering into a contract, not being able to fulfill the payment plans or the costs involved in buying.
Yeah, that's really interesting because now, I mean, I'm thinking about my mortgage process and just generally, especially even just as a first time buyer, it's so daunting. It's so intimidating to think about, oh my goodness, a mortgage, because there are so many misconceptions out there. Can you talk to us about those pain points that you have found with a lot of clients that have approached you, that you first started working with, and what they do worry about the most?
Sure. So what you tend to see is there's several stakeholders. You've got real estate agents, you've got banks, you've got buyers and you've got sellers. It's a lot of people to bring closer to a transaction. So from a buyer's point of view, the pain point we've always seen is, what is the true cost of buying a property? You'll speak to your bank and they'll tell you their costs. You may speak to an agent and they'll tell you some of their costs. What we want to do is bring all those costs together so that it's an informed decision. So from a banking side, you might have a valuation fee, you'll have a processing fee, and from land department, you'll have your 4% transfer fee, plus some small fees on top of that as well. And what we do is, when you instantly enter our platform, is we break them all down. So it's not a case of you look at a 1 million purchase and you think it's only going to cost me 1 million. You know all the fees involved in purchasing that property. So you're not going into this not knowing and having any unexpected surprises. When
we were talking earlier, you did mention that there's just a lot of misinformation out there, and also trust issues, I guess, within the industry, because you actually don't know people's agenda with the information that they're putting out there, especially on social media nowadays. How do people decipher that? How do they sieve out what has good intentions, what is right, what is correct, what is factual, and what really isn't?
Do you know what? It's a difficult one to answer. I think that we would always recommend speaking to a few people. Find who you believe you trust to guide you on this process of buying a home. Because there are people with intentions that may not be matched with your intentions. Ultimately, as a home buyer, you want to get the best property at the best price. And you want to make sure someone's going to match those values. And it's the same when it falls into a mortgage. A lot of people can go direct to their banks and they're going to get told that banking product. When you deal with someone like a broker, assuming they have the ethics to get you the best possible product, understand what you're looking for. We believe that a deep dive should take place. So I want to understand, when I speak to somebody, what's your goals in 5-10 years time? Because that'll be able to determine whether you go for a 1-year fixed rate, 5-year fixed rate, early termination clauses, because the devil's in the detail when it comes to a mortgage. And it's really important to understand people's futures plans in order to give the right mortgage product. So really, it's a case of speaking to as many people as possible. Find the people that you trust and they are able to add enough value to your transaction, and have almost like a golden circle. So a really good real estate agent, a really good mortgage broker, quite often a conveyancer as well, and that really fulfills the transaction. If you don't have that, or if you have a missing piece or a missing link, that's when things can get a bit tricky in the transaction.
I love what you just mentioned there, future planning, because I mean, a mortgage really is a part of that. When we're talking about 1, 2, 3, 4, 5 years, it is part of that bigger picture and that bigger perspective. A lot of people, I mean, many people see a mortgage as a burden, and they see it as, I want to avoid that and I don't want to take that step. Why do mortgages remain such a foundational tool for property investment?
What mortgages do is they allow people to leverage in order to buy a property. So let's say somebody has $1 million dirhams, but $1 million dirham property isn't going to fulfill their needs. They're a family of 4, they want something slightly larger. Whereas with $1 million dirhams, you could buy a 4 million dirham property effectively. So a mortgage is a means to get somebody onto the property ladder into a property that suits them. Now that's focusing on an end user. You also have investors on the flip side, which is a slightly different narrative. When you look at investors, the benefit of a mortgage is you can leverage. So instead of buying one property, you could buy 4 properties. And the way that I like to look at it is, say you buy a property at $1 million dirhams, you put down 300,000 dirhams, and the return you're getting on that's 5%. You're getting 5% on the 300,000 you've put down, and mortgage rates are as low as 3.7 at the moment. So if you're getting 5% return, you're making money on borrowed money. And then you can leverage that remaining amount to build up your portfolio. So I think it's a really important tool that can be used in home buying. Unfortunately, it isn't as vast in this region. The uptake of mortgages continuing to grow, not just here, but in the wider GCC. You are seeing the penetration of mortgages increasing, and not just for people that live here. You're looking at international international buyers as well. One of the banks recently announced a product that can go up to 80% loan to value for non-resident buyers. That's something historically we've not seen for a long time. You typically need to put a 50% deposit down. So they are really making it easier for international buyers, local buyers to purchase properties here.
You know, that thing that you spoke about when we talk about leveraging mortgages is something that you have vast experience in. That's where you kind of started in the UK. Can you tell me more about that?
Yeah, so we mentioned earlier on, my journey started way before coming to the UAE. I worked in the bank within the property sector, and I had the opportunity to buy a property, and as prices increased, so this was June 2008, so as you can imagine, you were able to pick up good deals in the market. Those prices increase, you can remove capital from that and then use that to forward purchase. If you continue to do that, you're able to build up a portfolio. And I think the important thing when you're looking at buying properties, it's not... Some people do it as a quick flip. There is always that opportunity. But if you're looking at it as a long-term game, such as investing in the stock market, people don't invest in the stock market for 1 week, 2 weeks, 3 weeks. It's a 15-year plan. And that's how you should look at when you're buying a portfolio of properties for investment. And that's how I looked at it. So these properties have still got them today. And you do see house prices go up and down within that period. But it's about being in the market and waiting for that opportunity. And one thing I personally love about properties, unlike stocks, and don't get me wrong, I believe in diversified portfolios, with a property, you have a return on investment on a monthly basis or yearly basis. You also have capital appreciation. You don't tend to get both of those factors when you're looking at stock markets, ETFs. So an ETF, you'll either have one that gives you a good return, or you'll get one that has potential high appreciation. Whereas with a property, you have the potential of both. So that's the view that I took. And that's why I like property. Funnily enough, I was looking at it the other day about how could I allocate some of my own funds. And I thought I really want to go more into the stock market. And I took a step back and I thought, property is what I know. Property is what I believe in. Irrespective of where the market's at, I've seen prices go up and down within my own transactions. So that's something I'm quite happy to continue to do, as long as it's a long-term objective. Yeah.
What's really interesting that you pointed out, Michael, is the complete awareness that the market goes up and down, but it doesn't sound like you fear that. A lot of people do have that approach. If they do have that cash lying around and they do want to invest, the thing that stops them is, but the bubble's going to burst. But this is going to happen. This is really unstable. What if the geopolitical situation here, messes things up in this investment? I think that's part of the game, surely. It's an almost guarantee, the ups and downs. Talk to me about your approach on that, because I think that's a mindset thing, but it's an informed mindset.
Yeah, absolutely. And I think that's something that a lot of people will carry on their own opinions. However, you've got two types of property purchase, in my opinion. You've got your buying to live in. That's one completely unique situation. If you're buying to live in, it doesn't really matter too much where the market is, as long as you're not expecting it to crash by 50, 60%. If market's going to go up 10, 15% up and down, realistically, you're buying a home to live in, to either bring up a family. You want them to be in a nice place that you can make adjustments to. So that's one aspect. If you're a first-time home buyer, or you're moving into your next level of home ownership to get a bigger property, more children, I personally wouldn't factor pricing into that in the slightest. I would go after what I could afford at that point and build a home. Like, you're planting your seeds here. We've seen this over the last 5 years since COVID, for example. We've seen a correction, and bear in mind the correction from COVID is we were a highly underpriced market. Whereas now the prices have increased significantly, probably more to where they should have been in line with global markets. I mean, I wouldn't compare it to London or New York, but certainly prices are in a very good place now. You may see more fluctuations in micro areas, so different communities you might see where there has been oversupply, but you won't see that vastly across the market. Whereas on the other hand, you have obviously got investors. Investors will pay a lot more attention, but again, there's always opportunity, and it's not when you buy the property, it's when you sell the property. So it's always about riding out bad situation. So if you are looking to buy a property and you think that the market's high, look at it as a long-term gain. So you're going to get your return on investment on a monthly basis, and then you're going to ride out to when the stock level is at a point that you're happy to exit at.
Right. And you touched on global markets there. You, of course, are experienced in the UK. As mentioned earlier, your team is growing in Saudi Arabia, Morocco, several different markets. What makes the UAE market, mortgage market in particular, exciting for you in comparison to all of these other markets?
They're all very exciting for me in different levels. If you look at the UAE market, the mortgage penetration rate is quite high, certainly compared to how it used to be. So we're seeing a lot more people taking mortgages. So one aspect is ready properties, of course. A lot of people don't understand that on handover you can take mortgages as well. So we're starting to see more penetration in that. In terms of, we look at Saudi as a market. Saudi is very interesting because it's very much in its infancy in terms of mortgages. This is something that didn't really exist 10 years ago. So you're really seeing a wave taking place of Sharia compliant mortgages that the local population are more comfortable with taking. And then when you look at areas like North America, you're looking at North Africa, they've got a heavy influence from Europe. If you look at Morocco, there's a heavy influence from France. So very, very similar to a European, more established market. So what interests me is the different ways in which these markets operate, so that they're not all the same. A mortgage product globally is very similar, but the way that the markets operate is very differently. We mentioned earlier on Abu Dhabi versus Dubai. Both very different markets when it comes to consumer behaviour. So that's what interests me the most, is understanding the consumer behaviour. How can we solve the pain points for these customers and make it a more streamlined process?
Yeah, absolutely. And what have you seen that have been significant changes in the UAE mortgage market over the last few years? And where do you see it going for the coming years?
So one of the things that we see very regularly is changes to policies by RERA or central bank, whether that be loan to values, additional fee financing. So during COVID, something that came out was fee financing. This allowed people to increase their buying power. So instead of needing the full cash up front for the fees, they were able to roll that into the mortgage. So what we found is people were able to increase their budget slightly and buy that dream home that they wanted. That has subsequently changed and they've pulled that back. But we've seen this throughout the years, where when I first came to the UAE, you could get a 90% mortgage. Now, when you have a 90% mortgage, more people have access to the market. They need to slow that down, which is why they started to reduce it to 80% under 5 million. So you'll constantly see the government or the local entities using tools to either catalyse the market or pull it back. And that's something that is very well balanced here.
One thing that you had touched on earlier, we spoke about leveraging mortgages to build your wealth. I saw an article about Adele and how, she was buying houses in America and she was just getting mortgage upon each house. And fans were at home saying, why would Adele need to get a mortgage out? She's got more than enough money. She's a multi-millionaire. There is a reason for that. Cash-rich buyers are opting for mortgages because it makes logical sense. Can you talk me through that?
Absolutely. You look at mortgage rates, as simple as that. If mortgage rates are at 3.7 and you can borrow that from a bank and then put your funds into another asset class that's going to generate more income, you look at the S&P 500 historical events. Don't get me wrong, it does go up and down as well, but historically you're 6, 7, 8%. Again, you're making money off of borrowed money. So you can make your money work better elsewhere whilst holding an asset that's going to generate more income, which then can be put back into an ETF, for example. So it makes absolute sense to leverage. And what you'll tend to find in those sort of circumstances is they might not be taking conventional mortgages that we see for us, which is your retail banking. This will be more of a corporate commercial banking facility that they've received, where they're able to leverage against their cash reserves. And it makes it a lot easier. And gives them the ability to buy a lot more.
Nobody would have thought we'd be speaking about Adele on Sobha's
more
Living
than
Room
happy
podcast.
to do so.
But one thing that I've been thinking about a lot, and one thing that we speak about on this podcast a lot is, the type of investors that we have coming into the region. It has dramatically changed over the years. We've, had the China market completely open up now to being interested in investing in the UAE in the last couple of years. Of course, we know there's a lot of Russian investors here in the region. For you, is that something that you and your team really look at in terms of what the avatar of your investors are and what they're coming in with and their different perspectives and approaches to investing here in the region?
It's super important. We look at client personas on a regular basis. And one thing that's really interesting is if we look at all that, we collect a lot of data to be able to work out what our client personas are. Not a lot has changed over the last 5-6 years. Average income, age, gender has all remained very similar. But again, nationalities is something that has come into play. So that's something where we do need to adapt and change. We do find certain nationalities do opt for cash over finance. Certainly you talk about the influx of Russians coming into the region. They've bought a lot of properties here. A lot of them do tend to be cash purchases. So we don't see much on the mortgage front there. But certainly the China market, the UK market, you look as a whole, international buyers buying into this market, you have got the top 5, which is generally India, Pakistan, UK and Europe are big buyers here in this market. So for us, it is about adapting. And an interesting point there as well is you'll be used to the type of mortgage products that you receive in your home country. So for us in the UK, for example, we'd all think growing up, fixed rate. We need a fixed rate. That is the way to go. Whereas a lot of people might think differently and go for variable rates. So a lot of that's education, understanding the market, understanding where we're going. Currently, we're potentially going into a low interest rate environment. So that's something that's really important for people to keep an eye on. We're starting to see rates go down. Being pegged to the dollar, we have got a massive influence from what happens in the US. However, we are starting to see the Fed rates come down. And as a result, we're seeing the mortgage rates come down here as well. So for anybody looking to take a mortgage soon, I would definitely take that into consideration. Anyone that has a mortgage, chances are they have fixed it at a slightly higher rate. I would definitely be keeping an eye on that.
You spoke about the fixed versus variable. Can we dig a bit deeper into that for anybody listening right now who potentially has been raised with the condition that we go for fixed? What are the pros and cons of both options?
So it depends on your risk factor and your current situation. We spoke earlier about, if I'm your broker, I want to know about your future. I want to know, do you plan on having a family? When you have a family, you're going to have school fees. And in that instance, you don't want to see your mortgage payment go up or down. You really want it to be consistent so that you have no hidden surprises for a reasonable amount of time, 3, 4, 5 years time. Whereas if you're a bit more risk averse and you see the interest rates dropping, going for a variable rate could be beneficial for you. So if rates are going to go down, and even if you do have that family, but you have that risk appetite to think that they're going to go down, then of course a variable rate mortgage could be beneficial for you. It goes beyond that with a mortgage product as well. There is a lot more factors to consider. When you're looking at fixed rates or variable, you've got insurance costs, processing fees, valuation fees. We like to take everything into consideration, and we'll generally amortize. An amortization is looking at your next 300 payments on a 25-year loan. How's that going to look for you? And make sure that fits in with what you planned going forward.
We touched a bit earlier on, potential approaches for particular in the UK market. I'm born and raised in London. I have a lot of friends and family still in the UK. There are people who are at my age now, at the age of 34, who are still struggling to even get onto the market. Then you look at the UAE, and I'm surrounded by the same age group, and people are soaring. They're already onto their second, third, fourth property. What makes it so different here in terms of that kind of confidence to be able to take that first step and get on that ladder here rather than, places like the UK?
Absolutely. I find it really interesting. You go to an event or a party, kids party in my instance. I've got 3 kids. Everybody there will want to talk about property. and you'll probably find 2 or 3 people that are actively interested in buying. So there is very much a drive for people buying properties. Everybody's interested. I think the barrier to purchase here is quite low. You do talk about a 20% down payment. It can be quite high. I understand that. But it gives something for people to work towards. And you'll generally find people will find the property they like, see if they have the cash available. If not, they'll start saving up for that and come back to us in 6 months' time. So yeah, that's something we've found very interesting. I think a lot of that has also been to do with what happened in COVID. And the way that the UAE handles situations. I personally was very impressed. We saw a lot of people leave the UAE and then post-COVID come back because they've realised how well things have been managed here. And that's during when we've seen a bit of a boom in the property market. And what I love to have seen is people buying in 2020, 2021, which was probably the riskiest time to buy properties.
Yeah.
And they've doubled, tripled the value of their property. So people that would never have had that opportunity before have now gained extreme wealth from properties. And now they're able to leverage, take cash out and buy another property. And that's when they really start building their portfolios.
It's interesting how different generations have different approaches to property. I would say that I'm a lot more high risk. I'm willing to take the risk, whereas my parents are from a generation where property just doesn't work for us. We're not lucky like that.
Yeah.
Is property investment luck or is it informed decision?
A lot of it's to do with informed decisions. History does repeat itself. To what level, you cannot compare. So price drops during COVID versus 2008, 2014, here in the UAE certainly. There's no exact drop or gain from that. 2014 we went into a 10-year decline. Nobody could have predicted that. Do we think we'll go into another 10-year decline? Probably not. And the UAE is doing a great job of bringing fantastic companies here. A lot of high wealth people from the UK, for example, are coming here as well. So it will be slightly harder to predict, but you can look at the facts, the historical events that have taken place. There may well be corrections in certain communities. It depends how much you're willing to dig into the details. So if you want to look at a community such as Sports City, have a look at how much stock and inventory is coming to the market. Go deeper than that. How many studios, how many 1 beds, how many 2 beds? From an investment point of view, that's going to help you understand what's coming to the market in the next 2, 3, 4 years' time, and how could that potentially affect your investment that you're making now.
So zooming out now, Michael, what is coming next? When we're talking about mortgages, what space do we see it going into? Do we see it completely restructuring in the way that the world is going right now with AI, tech? You're, of course, and you and your team are at the pulse of it all. So give us a bit of an insight.
So from an AI point of view, we'd be blind to see that it's not coming. I think it's important that the use cases are done correctly. For us as a business, we're not using it customer facing. What we want to use AI as an agentic tool that can help support every transaction. A lot of the issues in a transaction is lack of visibility for a customer. And internally, a document gets left on a desk for 24 hours and you delay something for a day. And there's several stakeholders involved in the transaction. So how can you get everybody closer to the transaction with an agentic tool that is going to drive the transaction through more efficiently, faster, with more transparency and more accuracy. So that from a business point of view. From a banking point of view, it's difficult to tell how they're seeing things. It will probably be a slightly slower adoption. But I think what we will see on mortgage rates and products is a lot more flexibility in the types of lending. So historically, you would see banks like to lend to employees. They like to lend to self-employed people with certain profiles. Beyond that, there's not many products. But what we are starting to see is more products come into the market for people that don't have your conventional income. So lending against rental income, for example, that's a big product in the UK. that's going to open up to a lot of these cash buyers that historically maybe were business landlords and didn't have access to financial products. Whereas bringing in a product like that, it will allow them to finance and then leverage and grow their portfolio.
You know, it's interesting because when we talk about the Netflix analogy in particular, a lot of things are subscription style nowadays. We're all used to it. You know, music, movies, cars are rented. You know, I want to ask you, do you see potentially mortgages going in that direction of subscription based?
I mean, effectively, a mortgage is a subscription.
Really is that,
Yeah, you take it for the term. Let's say it's 25 years. I mean, generally, the lifespan of a mortgage isn't 25 years because within that time, you'll either move on, upgrade, or downgrade. So typically, you see people move on within a 7-year period. So, but typically, you're subscribed to a mortgage for a set period of time. It's probably one of the oldest styles of subscriptions in the market. But where subscriptions may start coming in are more in the aftercare. How can somebody health check their mortgage in future? How can they track the value of their property? You know, like a lot of people will follow the price of their stocks in the market. Nobody looks at how much their property's worth on a daily basis. So that's something that may come into play, and then you can start doing health checks. What's the ability for them to take further funds out of their property, leverage those funds again? So I would say a mortgage is a subscription in itself, but you may see further subscription services beyond that.
So then to ask you, how much should someone be checking on the value of their property? Is it quite literally daily? Is it once a month? When should you be checking it?
I wouldn't say daily, because you'll get addicted to doing it. You know, you probably check your cryptos and your ETFs daily because they fluctuate quite a lot. There's not as much data around transactions. If you live in a community like the Springs, there's probably only 1,000 properties and maybe 30 transact on a monthly basis. So there's not enough data points to really track that accurately. But definitely on a monthly basis, it's good to know what's the value of your property, how much have you got outstanding, and that gives you a good idea as do you need to release equity? And that could be for anything. A lot of people like to renovate their properties. That's a use case for releasing. You can't release equity for anything. It needs to be certain use cases. So either buying another property or renovating a property. So I would say definitely on a monthly basis, it's worthwhile keeping an eye on how much your property is worth.
Yeah. We touched on first-time buyers. Let's go to the other end of the spectrum, those who are used to investing and who are actually focused on generational wealth and the future generations. Talk to me about how different that approach is when it comes to building wealth and leveraging, but also, you know, when we're talking about the way the world is going and the way the UAE is just rapidly changing, why is the UAE and why should the UAE be your hub for building that generational wealth?
Very, very interesting one. And I looked at this recently for myself. You have properties in the UK, for example. When you start taking all the taxes into account, your yearly tax for rentals, the returns that you need to complete, when you sell the property, you've got your capital gains. This doesn't take place regionally, certainly not for the time being. So building a portfolio here, whatever your cost to enter the market, so your 4% transaction fee, let's take that as the main fee. After that, you don't have any additional costs other than service charges and maintaining the property. And when it comes to selling the property, that you reap the rewards of what you've put into it. So whatever the value is at that point, you don't need to pay any additional taxes. Whether that's to come or not, I don't know. The way they've introduced VAT, they've done it on a very small level. So if it was to be introduced, I reckon it would be small also. But it is very appealing for global investors. We're starting to see the quality of projects increase significantly here as well. So it is becoming a lot more attractive for internationals bringing their HQ here, bringing their family here, buying a nice property, and then start building their investments here as well. So we've seen a lot of people sell in the UK to bring their funds out here, set up family here, and take advantage of that.
Well, as something that's been in the headlines a lot, and every time you scroll on social media, you're seeing this all over the news, particularly here in the UAE, is because of the tax changes in the UK. Now you see more and more high value or high net worth individuals now coming over, especially with the new budget coming into play. Is that something that you and your team have been advising on heavily for a lot of clients? And do you have a unique kind of approach to that? What are your thoughts?
So it's not something we advise on heavily. When it comes to tax structures, that's a whole different game ultimately, but it is something that we're very aware of. And what we're seeing is a lot more people coming to us with this concern. And they tend to have already established that the UK doesn't work for them. You know, we've accumulated this wealth. The amount that they're paying on a monthly basis, yearly basis, doesn't work. How can they be more aggressive in their tax planning? And that's what brings them here to the UAE. And again, with that, they're always going to set up a home, a foundation. So we get a lot of first-time buyers coming into the market from the UK. I say first-time buyer here, not in the UK, of course. And a lot of them are liquidating their assets in the UK. So pulling out completely. A lot of this can be due to inheritance reasons as well. You know, the inheritance tax laws in the UK are very, very strict. And it's not something that you can be aggressive with. So to circumvent that or work around it, we are seeing people moving away from the UK to live out their life here. And this is people that love the UK as well, live central London. Yeah. Central London's amazing. But the benefits are outweighed here.
Yeah, absolutely. One thing that you and I had touched on just before we started recording this episode was that Holo moving into Saudi Arabia and you guys launching there. That is a I would say structured move for the reason of the kingdom just growing in so many ways. For anybody listening right now, right, who has had their eyes on Saudi as a place to invest, can you give me kind of like a top 3 of why it should be something that they should be looking into a bit more? Absolutely.
I think when you look at Saudi, we're still a couple of months away from non-Saudis buying in the kingdom. We think January, February time is when this is going to take place. The opportunity and the price increases, the rental returns, they have just put a rent freeze in Riyadh because it was growing so quickly. But when you look at the growth that the UAE has had, we're seeing that very much take place in Saudi. And if we take a step back as to why Saudi for us, when we look at building a business or a new product or platform, is there a problem that needs to be solved? And we truly believe in that market that we can add extreme value. In every market, you've got buyers, you've got sellers. The difficulty is matching buyers and sellers in an efficient way. And that's really the challenge that we're trying to go in and fix within this market. And when you look at the vision of 2030 within the Kingdom of Saudi Arabia, it is to get home ownership up to a level of 70%. And that's something we really want to be part of.
I love that. Look, I really want us to, I told you at the beginning of this episode, we want to bust some myths here. So we're going to do kind of like a truth or false quickfire with you. All points that you've already touched on. So I'll get straight into it. Mortgages are only for people who can't afford to pay cash. True or false?
False.
False. You have to live in the UAE to generate steady rental income here.
Absolutely false.
False. You could use mortgages to generate passive income.
True.
True. Once you sign a mortgage, you're locked in with no flexibility.
False.
Can you tell me more about that, if we can just dig into that?
Yeah, absolutely. When you take a mortgage, the central bank governs that if you want to move lenders, there's a 1% fee capped at 10,000.
Okay.
Now, if you compare that to the UK, for example, exit penalties can go up to 6%.
Wow.
So it's actually a really fair level of 1% capped at 10,000. As long as you can justify to your new bank your affordability, then there's no issues at all moving it. And more often than not, you can actually negotiate with your existing lender. And that's something we always recommend first. Speak to your existing lender. If you're not getting anywhere, speak to someone like us. We can speak to them. We've got good relationships with the banks. And then if that doesn't work, we will find a better option.
Taking a mortgage means you are overextending yourself financially. Truth or false?
False.
False.
I'll go into that in a bit more detail if you don't mind.
Yeah, please do.
So it's very, very strict with debt to burden ratios by the banks, and they're in place for a reason, to stop people from overstretching themselves. So the central bank doesn't want people to overstretch, because that's when you start getting defaulting loans. So what they've done is they've put in place a debt to burden ratio that they're comfortable with. It is a high debt to burden. It's 50% of your income minus any other facilities that you may have, but they've done that for a reason, to make sure you aren't overstretching. So it's really important to follow those guidelines. Yeah, nice.
Last one, property investment is only passive if you hire a management company.
I'm going to say false on that.
Tell me why.
So I think you could look at this both ways. I've got property management companies. on some properties and I manage some myself. In the UK, I would say use a property management company.
Yeah.
Here in the UAE, I don't think it's required as much. If you want completely hands-off passive, it needs to be a property management company. However, what's really involved in renting out a property is the initial contracts. Make sure that everything's solid, the expectations are there, you do your part as a landlord, and then the tenant has their part as well. And then every so often you may have communication where you might need to fix something or repair ECs, but overall, over the course of a year, you're probably going to have very little interaction.
For those that, find the property management route a lot easier and they do want to be hands-off, what should the criteria be for looking for a good property management company?
Somebody that already manages a lot of properties, and someone that has a tried and tested track record of managing properties. I won't name any, but there's some fantastic property management companies here that have a lot of properties under management. And the reason for that is they do a very, very good job. As a non-resident landlord, it probably would be easier to have it managed. But if you're living here, there might not be as much of a necessity. That's my opinion. And I think that some people might argue slightly differently, but I think there's two sides to it. No,
nice. It's been such a pleasure to have you on the show. And I feel like you've added so much value. I've learned so much already. And I feel like I probably should have charged you. You should have charged me for this. But there's one last thing I want to ask you for people listening right now who are sitting there thinking, okay, Michael, you have convinced me. I'm ready to take that first step. What is the first piece of advice that you would give them if they're ready to take that first step now is to invest here in the UAE? Absolutely.
Find out your affordability. Now, self-plug, I would say go to our platform. Within 3 minutes, you can see how much you can afford, what are all the costs involved in buying that property, and then you can make an informed decision to go on the property portals, speak to developers like yourself, and then find the property that works for you. That would be my first steps. Well, you know what? I used Holo, and so I know you, and then the whole process was just so easy. And I think that's just the important thing, that find a partner that makes sense for you and who truly is invested in your long-term goals as well. Exactly what you touched on. Michael, thank you so much. No, thank you. Thank you for being here. I hope you enjoyed it. Welcome and have a great day. Very much. Thank you. Thank you. Before we wrap up, here's a preview of what's coming next on Sobha The Living Room. We're diving into one of the biggest shifts in Dubai real estate, flexible payment plans. What they mean for investors, how they are changing access, and why they're becoming a smart way to build long-term value. Our next guest has spent decades in the market and brings a sharp eye for what really works. Don't miss it. Follow Sobha The Living Room on your favourite podcast app or subscribe on YouTube.